Everyone expected 25. I think if they go 50, that will be nuclear catastrophe for financial markets 1 or 2 trading days after the effect. You'll see a massive rally and everything because everyone believes that the more they cut rates, the better. But I actually think it points to a deeper rot in the global financial system, and that will come through in much more depressed prices after the fact.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. BitMEX co-founder and Maelstrom CIO Arthur Hayes shares his insights on the Fed rate cut could lead to a financial catastrophe or a short-term rally. Plus, he weighs in on the potential ramifications of government spending, inflation, and the reliance on fiat currency systems across major economies.
I, at a high level, think that they should not be raising rates. I believe that the U.S. economy is quite strong. If you've seen the GDP prints over the last 8 or 9 quarters, it's been consistent growth. The U.S. government continues to spend an insane amount of money, which is keeping economic growth at a very fast pace. And obviously that helps the election chances of Kamala Harris and her running mate, which I think is the goal of the current Democratic administration. So the Fed cutting rates when you have massive government spending, you have inflation that's above their target. I think it's a mistake. I think that inflation is going to accelerate into the fourth quarter if they decide to continue cutting rates. And I think that the response is going to be, if the markets start to falter, they're just going to do more of it, and they're going to make the problem even worse. So if they do 25 or 50 and the markets react opposite of what they believe, so I think everyone believes that the markets are going to go up. If the more they cut, the more the markets go up, whether that's stocks, bonds, cryptos, all that kind of stuff. I actually take a contrarian view that, the more they cut, the more the markets are going to dislike that maybe 1 or 2 trading days after the fact, but they're not going to learn their lesson. They're just going to keep doing more of it. So we're going to get a very quick cutting cycle. So that's sort of my view. I don't think it happens right away. I think if we get sort of a massive sell-off, people sell what they can, not what they want. Bitcoin's a very liquid asset. People have a lot of illiquid assets on their books, especially if you're an investment manager. So if you have some Bitcoin, you dump it. If the basis comes down even further than where it is today, sort of that's the difference between Bitcoin and futures contracts. You see large hedge funds like Millennium and these pod shops who put on this basis trade, starting with the ETF launch earlier this year, unwind those positions and sell Bitcoin spot into very illiquid markets. So I think Bitcoin goes down with the rest of the markets, but quickly, as we sort of see a financial collapse in the early stages, Bitcoin will say, okay, I believe that the markets will respond positively to more printed money. Janet Yellen and Jay Powell can afford a financial collapse a few weeks before the election, especially if they want Harris to beat Donald Trump. Sure, but I don't think it will. I still have I have $1 million price target. I'm more of a 2026, 2027 sort of person. I think next year we really get a ramp up in fiscal spending, regardless of who wins the U.S. election. And if the U.S. dollar declines a lot, then China has room to enact stimulus as well and keep the yuan stable. And then you have the rest of the other major central banks are following in the footsteps of the Fed. They look at the Fed, they're easing, so we can ease too. We can do as much as the Fed is, and our exchange rate isn't going to get trashed. And so that's what I think happens once you get the new president, whoever it is in the U.S., because both Harris and Trump are committed to spending a lot of money. Trump is committed to cutting taxes, and Harris is committed to welfare payments.
Kamala Harris made her first public statement amid her campaign for the United States presidency, vowing to encourage investment in artificial intelligence and digital assets during a Wall Street fundraiser. We will partner together to invest in America's competitiveness, to invest in America's future. We will encourage innovative technologies like AI and digital assets, while protecting our consumers and investors, Harris said at a fundraiser in Manhattan. Bloomberg reported on September 22. We will create a safe business environment with consistent and transparent rules of the road, Harris said. We will invest in semiconductors, clean energy, and other industries of the future, and we will cut needless bureaucracy. It's the first time Harris has made a public remark about crypto since she became the Democratic Party's presidential frontrunner. Her Republican rival Donald Trump has also worked to woo the industry. The crypto industry has been waiting for this moment to see if the vice president would branch off from President Joe Biden's approach, who some have seen as unfriendly to the sector. Last month, Harris' senior campaign advisor Brian Nelson hinted she would support crypto policies if she wins the November election, but said the industry needs rules of the road as some companies have collapsed. This is an important and constructive statement from Kamala Harris. Coinbase policy chief Faryar Shirzad said in a September 22 X post. It's not nearly as forward-leaning as the concrete and visionary positions taken by Donald Trump, but it's still notable because she recognizes digital asset innovation as being important and on par with AI, Shirzad added. Alexander Grieve, the government affairs vice president at venture firm Paradigm, called Harris' remarks encouraging on X, adding that regardless of who wins in November, this should be the last anti-crypto administration. This is progress, and progress is good, crypto venture firm Variance legal chief Jake Chervinsky wrote on X. But while protecting our consumers and investors could mean a lot of things, the anti-crypto army uses consumer protection as a smokescreen to conceal their attempts to destroy our industry, he claimed. I, for one, want to see policy details. Crypto has become a campaign issue as U.S. crypto companies, including Coinbase, Ripple, and Gemini, have spent nearly $120 million to influence November's elections, the advocacy group Public Citizen reported last month. Trump has already shilled 4 lines of non-fungible tokens, NFTs, backed his family's crypto platform, and closely embraced the crypto industry. He's promised to be a crypto president and to sack Securities and Exchange Commission Chair Gary Gensler, whose agency has launched multiple enforcement actions against the country's most prominent crypto players.
I don't know how long the cycle is. It depends, but I believe that if you think about the global reserve currency, the US dollar, and all the wars and all the spending that needs to happen to keep the system intact, we're at this precipice where you can go either way. You could have a sort of a massive austerity, massive deleveraging, maybe a revolution, or the authorities can try to keep things stable by fixing the price of government bonds and printing as much money as possible to placate their electorate, whether that's in the United States, that's in the EU, that's in China, that's in Japan. Every single major economic bloc or country runs a similar sort of fiat fractional-based financial system, regardless of whether they're democratic, autocratic, communist, capitalist, whatever. Those are all sort of smoke screens. At the end of the day, everybody prints money. Everybody has a fiat fractional banking system. Everybody needs inflation. Everybody needs to take their savers' wealth and steal it so that the government can afford its spending programs, whether that's to fund wars or that's to do, Green New Deals, or it's to onshore production, or it's climate change policies, or it's, welfare payments to the poorer individuals who are losing out in sort of this economic transformation, AI and all this kind of stuff. There's so many reasons why the government needs to spend money and not try to tighten its belt and restore confidence in these fiat currencies that we exist with. Sure, and Bitcoin can go to $1 million to $10 million. Bitcoin's what, $1.7 trillion market cap. It's magic internet money that was created out of thin air, starting in 2009. Bitcoin is the antidote to what has happened. Yes, okay, they've printed a lot of money globally, the U.S. being the most egregious with it, and the reaction has been Bitcoin. And we have this cryptocurrency ecosystem that has thrived based on all this printed money, and we have all these different types of assets that are created and have value because we have such a up financial system. So I wouldn't say they're getting away with it. Bitcoin's a smoke alarm. It's telling us that there's something wrong here.
Bitcoin continues to hold $62,000 into the weekly close, having seen a lasting bounce off September support $10,000 lower. Now, optimistic BTC price forecasts see the good times only getting better for bulls. For Titan of Crypto, the first stop is $85,000. Uploading a chart of Bitcoin's relative strength index, RSI, on weekly timeframes, he suggested that momentum was gathering to take the market to new all-time highs and beyond. Bitcoin $85,000, intermediate target, he summarized. The weekly RSI breakout signals an explosive move, by the end of the year for BTC. RSI is a classic trading indicator used to define likely local tops and bottoms, while additionally giving insight into the strength of an uptrend or downtrend at a given price point. The weekly RSI currently sits above the key 50-100s mark, breaking a downtrend that has been in place since March's latest all-time high. Titan of Crypto added that if September ends in the green, the uptrend should continue throughout Q4. Historically, when September closes green, Q4 has been bullish, part of another expo stated. If we close above $59,000 this month, a bullish end of the year is likely. However, even with a red close, both 2017 and 2020 saw green Q4s, promising Q4 ahead. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.